Have you ever wondered why a candy bar that used to cost a penny now costs $1? Or why your grandparents could buy a house for the price of a new car today? The answer: inflation. Let's break it down. Inflation, in layman's terms, is the general rise in prices over time. Think about it like this. You see your favorite apple pie in the store. Today it might cost you $5. But next year, due to inflation, that same pie might cost you $6. But why does this happen? Well, it's partly due to something called money printing. When a government prints more money, there's more of it floating around. But the amount of goods and services available remains the same. So, the cost of those goods and services goes up. Inflation, in essence, is the invisible taxman, slowly but surely eating away at the value of your hard-earned savings. So, you've been diligently saving your money, but inflation is eroding its value. What does this mean for your stash? Imagine a sneaky thief that quietly slips into your home each year and takes a small percentage of your savings. This thief is called inflation. It's the rising cost of goods and services over time, and it chips away at the value of your savings. Think of it this way. If a cup of coffee costs $2 today, but the inflation rate is 2% per year, that same cup of coffee will cost you about $2.04 next year. Doesn't sound like much, right? But as years go by, inflation's compounding effect can significantly erode the purchasing power of your savings. This gradual decrease in the value of money means your hard-earned savings won't stretch as far in the future. If you don't account for inflation in your financial planning, you could find yourself with a lower standard of living than you expected. It's like planning a road trip without considering the cost of fuel. You might not get as far as you hoped. Inflation can be a real downer for savers, but it's not all doom and gloom. Remember, knowledge is power. By understanding the impact of inflation on your savings, you're already one step ahead in preserving the value of your money. As if saving wasn't challenging enough, let's talk retirement. How does inflation impact your golden years? Well, picture this. You've worked hard all your life, stashing away funds for that dream retirement. You've planned it all, from the golf lessons to the cruise trips. But then, inflation rears its ugly head, and suddenly, your well-laid plans start looking a bit shaky. Inflation, that invisible taxman, has a sneaky way of eating into your retirement fund. It's like an unwelcome guest at your retirement party, munching away at your buffet of savings. The cost of living doesn't stay still. It rises year after year, and your retirement fund needs to keep up. If it doesn't, you might find yourself with a shortfall, and nobody wants that. Here's the thing. When you're planning for retirement, it's not just about how much you save. It's also about how much those savings will be worth in the future. If inflation is gnawing at the value of your money, you'll need more of it to maintain the same standard of living. So, inflation needs to be a key player in your retirement strategy. You need to plan for it, just like you plan for your annual vacations or your grandkids' birthday gifts. Retirement should be a time to relax, not worry about whether your money will last. So, how can you beat inflation? Let's delve into that in our next scene. Feeling a little down about inflation? Don't worry, it's not unbeatable. There are ways to hedge against this invisible taxman. In fact, you've got a few aces up your sleeve, and it's time to play them. Let's talk about two of those powerful cards: stocks and cryptocurrencies. Investing in stocks is like planting a seed and watching it grow over time. It's a time-tested strategy to beat inflation. You see, companies have the ability to adjust their prices to account for inflation, which can lead to increased profits and, subsequently, higher stock prices. But keep in mind, stocks can be a roller coaster ride. While they offer potential for high returns, they also come with risks. So it's crucial to do your homework and maybe even seek advice from financial professionals. Now, let's turn to the new kid on the block, cryptocurrencies. They've been making quite a splash in the financial world. Bitcoin, Ethereum, and their digital siblings operate independently of central banks, and that's a big deal when it comes to inflation. They offer a potential hedge, as their value doesn't degrade with the printing of more money. But remember, cryptocurrencies are volatile. Their value can skyrocket or plummet overnight. So, if you decide to journey into the crypto universe, be prepared for a wild ride. Both stocks and cryptocurrencies can serve as tools to beat inflation, but they're not magic wands. They carry risk, and their success is not guaranteed. That's why diversification is key. Spread your investments across different asset classes to balance potential gains with risk. It's like not putting all your eggs in one basket, right? Inflation may be inevitable, but it doesn't have to spell disaster for your finances. By being proactive, staying informed, and diversifying your investments, you can turn this invisible taxman into a less daunting adversary. So roll up your sleeves and let's take on inflation together. So, we've covered a lot today, from the invisible taxman of inflation to strategies for beating it. We dove into understanding inflation as a stealthy thief, nibbling away at our hard-earned savings, subtly devaluing our money. Remember, it's like a relentless Pac-Man, gobbling up the purchasing power of your dollars while you're busy counting them. We also explored how inflation affects our golden years, casting a shadow on our retirement dreams. It's like that unexpected guest at your retirement party who insists on taking a piece of your cake. You didn't invite them, but they turned up anyway. But fear not, we've also discussed strategies to beat inflation. By investing in assets like stocks and cryptocurrencies, we can potentially build a financial shield against the inflation monster. If you found this video helpful and want to see more valuable content like this, please consider giving us a thumbs up and hitting that subscribe button below. By subscribing, you'll stay updated with our latest videos and join our growing community of savvy viewers. Don't miss out.